Holy melt up. What a crazy move. We really love to see it. This is going to be a fun cover here. So, recap time. Yesterday, we had some Powell fibs I'm going to go over here in a sec. And we had three different things we're looking for to keep this market momentum either to the downside or squeeze back up. And it didn't really matter to me, but the three big ones that I wanted to see on that rollover, we needed to, one, stay under the Fibonacci that we had poised right here, right? The top of the Powell release. That is a price level we needed to stay under to head back down. That's number one. Two, we said under the 666 for continuation. Here's the 666 on the 5 minute, okay? SMA. Looped it, perfect squeeze point. Nasty, right? And three, the crosses. The 200 SMA never came back through the 666, right? So we have the 666 in the purple here, 200 in the peach, and you notice the moving averages did not cross, right? See them spread right back out and out. Now, we had these fibs here pointed to the downside, right? And best case scenario was those three catalysts were come about and we would get the short. If not, we were going to get the squeeze. Now, I'll show you exactly where you're going to redo these fibs. Now, this super high volatility range is Powell release and Powell bottom. Now, without even looking, I know this is going to time the top. Yep, okay, not to the penny, but it was right there. So the Fibonacci extension. Now, remember we said about the golden pocket yesterday. The Powell is what I wanted. I fit this to the downside because I was really hoping for a little bit of a pullback, but if it melted up, also fine, doesn't matter to me. All we had to do is swap biased, and we hit 4,900 something on the big account today, and a nice little 160 winner on the small. So we're just about $2,000 on the small account. We started with $1,600, 2 trade days, $400. Now, coming into the Powell Fibonacci, the golden pocket is either above or below the 50. So when you're looking at the 50 retrace, you're looking at either the 61.8 or the 38.20, whichever way you drew it. If you are looking to the upside, you're looking to purchase that 38.20 golden pocket. And imagine that, right where the pre-market low is before she squeezed out, golden pocket, right? And this turned into a FOMO controlled buy. And controlled buys are when something rides either the 90 MA or 10 SMA. You can use either. They're very close. And the price action never comes back down. Now, stage one of a regular Fibonacci, you would want to see the breakout of the 100 fib, go to the 1618, pull back to the 100, and continue progress. Well, that did not happen. We got a full melt up. And we identified this very, very early for this squeeze especially. Now, let's dive in a little bit to our longer standing Fibonacci's as well. Here's the 435.47. This was the bottom. We also needed to go below this weekly. It's right here. And lo and behold, this is the 50% of the Powell candles that we just fibbed out as well. See it double overlapping right there. So gold level right here and teal level for the weekly. So that level right there, which we have on 435.47, that was a major support. If we did not stay under, it was going to squeeze straight up, okay? And we didn't get any of the other indicators for the rollover. 666 was resistance, nope. 200 cross, nope. Under the 0%, nope. So it was a force up. So we swapped obviously long because all the catalysts pointed to that and had a force up. And I told everybody no shorts until at least after 10:30 euro close, maybe find something up there, but very lackluster. And I said the next one is 444.53. And again, if you guys remember the futures trade, I tagged everybody in this one as well. And I said the biggest over under and scariest short level to be above for the squeeze out is 4411. Do you remember that is the giant 3820 golden Fibonacci right here that I have for ES. Now I said if that was under, great, we're going to come back down. But look, we did the Powell as we did in the last video right here, right? Golden pocket, same thing obviously because it follows SPY. Boom, rips back up. Now again, we had a very close cross of that 266 on the futures, but nevertheless, and I did bring up some key points about our regular oscillation indicators we bring on the bottom, saying that this is a very terrifying trade setup if the RSIs continue to make higher lows. Now, we did get a little bit of abrupt break, and that's because of the open, obviously. Live market pre right here, tiny bit of data, and then golden pocket hit, and then she just ran. Now, again, we had these pointed to the downside, looking for a micro relax, maybe down to the 50 fib. That would have been best. That would have been a buy here and then up. That would have been perfectly fine. We were never looking for absolute downside. We were looking for a dip buy, actually. So I was looking for a temporary down and then back up to FOMO melt. 4,500. And let's see where our last target is on here. Yeah, 509.01. So this is the ending of my huge weekly Fibonacci. So if we do go a little bit higher here, great. If not, 2360 is what we called for the top today. If we go up, there's the 2360 fib. I said 4477 in my chat. I said it's coming up, guys. No worries, going to FOMO out. And another thing about the standard deviation is we had lots of headroom, okay? We came down to the -1, right? And we don't stay outside of these ranges a lot. Here's the -1 on the deviation. boom, right to center, squeeze through. So what does that mean? We can hold the center, go back up to the +1 because we came from the -1, right? That would be a trend. Let's take a peek at that real quick on SPY as well, just so you guys can see that. This is standard deviation, 5-day, 5-minute. And remember when I did this, we'll go do a clean chart here for the 666. And I said, well, if the data comes out, we need to backtest the 666, right? In our last video, that'll be in the description below if you missed it. We needed a backtest of this 666. And once it broke over it way back here, we say that screenshot, it never came back till data yesterday, then squeezed it again today. Same goes for standard deviation. Okay, those points of interest need to be tagged before rip rally. Now, obviously, if you look back, the 5-day, 5-minute, it was just chopping the center the whole time. We actually didn't even get outside of half deviations. And we talk a lot about speed and manipulation of the candles when the price action shrinks down and doesn't have extreme volatile moves. Instead of either overnight, it puts in a good move and then goes, sour. It's like 0.3 to 0.8%, doesn't really move all that much away from deviation. So you see the standard deviation right here, and we just didn't get too far price action above or below. We never made it past the half deviation. So those dotted lines you see in between the regression trend center right here, the white line. Oh, that's the highlighter. Regression trend, this is the 0 line. And this is the +1 and the yellow -1. And you see these dashed lines in between right here. That's the halfway point, right? So we know the half deviation marks, when they started being respected, we knew that it was going to be some crazy, crazy, crazy tight manipulation. This sucker did not want to go, and the range in which something moves gives it the availability for breakout, breakdown, right? The volatility. And the candle sizes, and when it gets manipulated and just stuck on the standard like this, of course, anticipating of news, the ramp up, like we said in the last video, a huge amount of priced in FOMO bubble up. We just went like this with the drawing to it. I'm like, obviously priced in for a big old snap up. And again, I was just looking for a pullback to go back long because ultimately, and again, if you've been following along with our videos, go to that 1 year, 1 day. And the last time we see it, I said it's very hard to see over here. So we zoomed in. I said the last time we came anywhere outside, and this is very rare. Here's the plus or minus rather, because we're on the bottom, 2 because it's green, and -3, -1. So you see the price action right here, lowest point. Okay. In a deviation for the weekly and the daily, you see these hard lines right here. This is the -1 on the daily, but these big, hard, dashed, choppy lines, that's the weekly 1 year deviation, okay? So in between right here, the 2 and the 3, right? That's where it hit, half deviation between the 2 and the 3. And that's extremely rare on a yearly time frame, 1 year, okay? And if we back up, I said, well, if it melts back up, we don't really have too much else going on, And we said RSI is just starting to get hot. It could stay like that for a week, 5 days, whatever it wants to do. And that's fine. I'm still going to buy puts. My puts were down $18. I added today at the tippy top of that 2618, got 64-day out 440 puts, and I'm red for $18 overall. That's it. They were green 160. They were red 170 at one point. Obviously on some of those rips, but all the premium came right back in for a 64-day out, and I'm only red $18 on 4 puts. So as I keep adding these, and again, just to reiterate, outside of that range, look at where the market could potentially go. Now, not saying this is the end all be all, but this is a very big over under trend line we've been chopping on here. It made a decision yesterday in the doji. So any opposing down or up from yesterday's body on that doji, also very good over under. But for the deviations, this is where we're coming into. We are coming literally into right here, the +2s. Okay. So here's the 1, here's the 2. We're right at half deviation. And I said this to my group as well, and I said the half deviation is going to be your over-under. So I call the 430, I think it's 437.80 yesterday, and that's right where this half deviation is. And if it goes over that, it's gone. She's gone, because the deviations and shorters and everybody else that are going to get blown out of the top here are going to get destroyed. So where does that bring us? Well, we have the Powell. Let's get this back here. Fibonacci, come all the way back up. And my last target for me to see higher here, and that is 444.53. That's the next weekly, that's the 100. And then if we get a little bit higher than that, the giant golden ratio one is way up near 450, and that's like the extension target. Now, if we're just utilizing Powell Fibonacci, we have room all the way up to 450. So don't be surprised if we see 450. Are we going to get a pullback before that? Who knows? But we have to be ready for it, because in the next coming week, I don't care if it pushes up another 6-7 points on 4 puts. They could be a couple $100 red. We have 64 days for it to work out. And for 64 days, I highly doubt that we're going to see this RSI stay hot. So that's why I grabbed a little bit of put action there. And then you can see just, that nice volatile top side of the MAC, no oscillation. We are getting it ahead of time here, obviously, but we are putting a lot of time on these puts and obviously being very, very frugal with them. But now for tomorrow, we have quad witching, right, on Friday. And that simultaneously lets off a lot of hedge. So if you don't know what quad witching is, give that a peek. Trillions of dollars of options expirations, a lot of those being hedge. So when the hedges get out of the way, right? So if anybody sold put credit spreads or just massive multi-million-dollar positions to hedge downside, right? So selling against share calls, whatever hedge they decided to do. If they held shares and it was an ETF and they sold calls against it, they're going to get blown out. But if they were protecting to the downside or even trying to buy, selling puts, we don't know what those hedges are going to be. You could look through and we could try to navigate it, but it doesn't really matter because the technicals are still going to play out perfectly here. So when that gets out of the way, when quad witching comes, what happens? Well, a whole new rush of options coming into the holiday week. We have no Monday trading next week, are going to be a little slow. Now, we could get some really just boring chop. We got a little bit of data, but it's all about the Fed speaks coming up and how they're going to let the market digest and narrate the further meetings, right? And how Powell did, because he was supposed to be hawkish and was not. And we did end up flushing these targets. Now, what's to come? Well, the trend line is going to be a huge, even into the intraday. So 440.50 is where I said the market would probably be the easy long today. Back up to this trend, and we actually squeezed 444 almost. So this big old 2618. So in the rules of Fibonacci, after the 261 is completed, you usually look for the tie back down to the 1618 and the tie back down then to the 100% Fib, which we're going to be coming in right here, which is lower, lower, lower. It's actually right here, 100. And then to the golden pocket. Okay. So if we get the relax coming into next week, a holiday week after quad witching, after the hedges, great. If not, they're going to put a new round of options in here, and we just don't have too much else to go. I think, again, where's my final extension? 1618 is 459. So I'm thinking 450s would probably tap out a lot earlier than that. We have the 2360 Fib out there. And that's like pretty much the end all be all of the RSI overheat on the daily. And that's my opinion. If this pops up just even a little bit higher and completes that 450. So if I hold through another 8 points or whatever on the puts, doesn't matter. It's very small. We have months and months of time. Probably buy some more up here even and see some daily, right, deviation hits of the +2. Go back to that 1 year daily. We are way extended on that deviation. So if that happens to come back in, and we do have some very reputable resistances coming up. The 100 Fib right here of that weekly. There goes the highlighter again. And this guy right here, that's going to be the 2360. Okay. So 100 Fib weekly target, 444.53. And the next one, 450. It would be a nice psychological number, right? 4,500 for the futes. So if we go back to the futes, you're going to see same jam right here. That's where it was. 4509, 261 from the weekly. The final target. Okay. Has to get over 2360 to make that. Obviously 2360 where I bought some more puts here today is a giant gold level and the top of the day for Fibonacci. So again, if we retrace for a little bit and just come down, that's fine. If not, we're looking for that next force up MOBO. Okay. There's no real stopping melt ups. If you've seen these things, like I have over the course of the years, you don't want to be a part of getting in their way, right? And last but not least, just to let you guys know, the oscillation on the weekly is even like just getting started. So you see this MAC and how we called this higher low. We actually bought the bottom here, NVIDIA at like 116, Microsoft super low, all the RSI higher low, higher highs. Now it's the weekly's finally getting a hot tag here. Now, that doesn't really happen either hot or cold in a regular scenario. We've been over this. If you're looking at the yellow lines right here and right here, this is the bear market year for 22. And then we have 21's free market, we call it. They call it the free money market. Whatever dip it was just bought. That's the year after the pandemic. And that's the only time where you're going to see multi-hots on the RSI when it was completely propped up by the feds. So every time it got hot there, just like, weekly hot, dipped for 2 weeks, got bought up immediately, hot for crazy amounts of time. But every one of those hots, you notice too, did have a pullback. Just because the pullback got bought up doesn't mean there wasn't a pullback, right? So look at those wicks. So every time you see that hot down, so that's why I'm buying these puts right here. Hots, wick down, nice rotation down, another one, wick down. So as that weekly nears the hot, and I have 64 days for this to work out, on the put side of things, we are just nearing that hot. So if we do get another forced up push here or anywhere near the 2618 or, even higher than that would be the 100 Fib, but anywhere into that next half deviation point, That comes in right at 4,500 as well. So 4,500. I'm thinking right around 4,500 top. Maybe it peaks red for the next week. That'd be about it. And then we could actually get at least a small pullback, maybe down to the standard deviation center, back test that support and continue higher. I think we still can track down all-time highs with the idiocracy that is the FOMO melt-ups that are longs. And just to bring this one up too as well, without the RSI and everything else, price action to high-low of what our range was in the last 2 years, all-time high, last year's lows. We walked it up every single Fibonacci level. This is one Fibonacci that everybody should have on, very standard. Coming up to that 2360, push the 50, resistance came down, right? 2360, push 50, came down, standard deviation, broke out. Now it's coming to the next. So again, the topping action at 78.60, that's where the next pullback is going to hopefully come about. And when you see that right at 45.30, it gives us a little bit more. But this whole week gap up now, and this is going to be obviously closer tomorrow. We aren't coming down anywhere near this. This gap and this candle that we're ending tomorrow is going to be one of the biggest utilization for Fibonacci, support resistance, targets, everything. So this gap right here is going to be substantial. Oh, I didn't hold the transparent. Gotta make that a little different there. There we go. So weekly, I always making teal. So having a weekly gap, go take a look at the weekly chart and how many gaps we've actually had. The one that was left on, we had just filled. This is the futures contract one. Where's the weekly? SPY is the one I'm thinking of that we just did the fill on. Okay, I don't know why that swapped. There we go. So last but not least, the last weekly gap that we had seen here. And again, we colored that one. That was the end-all be-all point for that squeeze too. And when there are gaps, especially in the futures or anywhere else, you need to be paying attention to those, especially in the weekly. If it drops onto the daily, dailies are also very important. But gaps create magnets. Algorithms love gaps. They pay attention to those and what they hit for moving averages. So I'll get back into some of that in other videos. But thanks for tuning in. And hopefully you guys made a little bit of money on this one. We're going to cross our fingers for a little bit of maybe a pullback tomorrow. We'll see. Even if it chops and forces itself back up to 453, doesn't matter to me. Just more puts. And we got a long time for those to work out. So just to reiterate, looking for top of the top right here, 2360. It'd be 449, just 450. Before that, just one more push up this week, 44453 and 44326. We got a little bit of a box. And again, if it starts to peel down from that even tomorrow after quad witching, which I doubt, I think it's probably just going to chill off and go sideways. It's not going to be a good trade day tomorrow. Holiday week. A lot of people take off Friday, get the extra Monday in, get the extra vacation for the fam, so on and so forth. But you guys take care. Have a great Father's Day to all the fathers out there. For the Sunday, well, stay tuned and come for the next video. You guys stay tuned for that next video. I'm looking at one more little thing here for that 666. So one thing for tomorrow as well on that catch up, as we said for moving average, just to throw this in here because I forgot to cover this. 666 right here on the 1 minute broke up. Okay, never had the back test. Remember in the last video, again, I'll put it in the description, where we had ran for 5 days plus over a 666 break, and it never came back for confirmation ever. So we knew dumping into that data, coming back to where that was going to be pliable over under, ended up being one, and use the 1 minute 666 as well for this, because we're recrossed here because that 1 minute 200 did the cross, the 5 minute did not, is what we were looking for the short. But the 666 catching back up, if this happens to come back down and then bang in between the 200 SMA 1 minute and the 666, and then making a choice to a chop tomorrow, that's something to look for. Don't take tomorrow too seriously. Slow play it, and just don't short just because it's up doesn't mean it's going to come down. I'll catch you guys on the next.